Hey people, Mike Martin's here with the Mike Martin channel. Thanks for joining, liking, and subscribing. All right, guys, Canadians in for a world of hurt. What are we talking about? Well, we need to address this because we've been addressing it. We've addressed it several times on the channel in the last 10 years. They're raising interest rates, but for how long? Are they going to go to interest-only mortgages so people could afford their home still? What are we talking about? Australia, New Zealand, UK, Canada, blue states of America, they've been competing for wealthy money. They've been competing for money, offshore money, to be parked in their countries. And disenfranchising the middle class in those countries and leaving people bidding for properties that in Vancouver or Toronto or any of the other major cities, depending on what city was affected by money parking, money laundering, foreign investing, they're in for a rude awakening because your $1.7 million teardown that you bought, that you could realistically buy in some part of Florida for like 40 grand, you're in a lot of trouble because you didn't get the bang for your buck. And all the real estate agents out there that were telling people, if you don't own now, you will never own anything in your life. You'll be bought out of the market forever. Remember those real estate agents? What about now that you're bought out of your food and you can't even afford food anymore? Let's take a look at what's happening. All right, the CBC is reporting here. Bank of Canada hikes rates to 2.5%. Here's what it means for you. So they basically go in. Canada Central Bank raised its benchmark interest rate on Wednesday by a full percentage point. Sorry, I had to fix that there. For percentage point at 2.5%, that's the biggest one-time increase in the bank's rate since 1998. Keep that in mind, folks. The bank's rate impacts the rate that Canadians can get money from their lenders on things like mortgages and lines of credit. Two of Canada's big banks have already moved their benchmark rates in response, with Royal Bank and TD raising their prime lending rates from 3.7% to 4.7%. As of Thursday morning. That's actually today. Now, people that are in a variable rate mortgage are screwed, and the people that are in a locked-in mortgage that need renewal are screwed. So whether you're renting or you own or whatever, you will be affected by this. Every Canadian will be affected by this, what's happening here, because people bought in and over-leveraged and borrowed more than what they could carry, and especially with terrible underwriting, a lot of the banks are on the hook for terrible underwriting that most of these deals should have never been approved from day one. All right, what's going on? So what is Better Dwelling reporting? Canadian real estate psychology is crumbling fast. Watch this, guys. Watch what they say here. More people expect Canadian real estate prices to fall than rise. A new Nanos poll reveals that Canadians are quickly turning into real estate bears. Just 30% of Canadians expect real estate prices to rise. Down from 70%. So 30% of Canadians expect real estate prices to rise. There it is, comma. And I wanted to kind of throw that out. So people are still in belief that the housing is just in this temporary splurge, but it may be. It may be, and I'll show you why. So it goes back here. Bank of Canada hikes key interest rates by a full percentage point. Surprise move. Not a surprise move, and I'll prove it to you. And this goes into Bank of Canada warns inflation is too high, makes the biggest hike since 1998. And it's been too damn long. Canada's economy is overheated and inflation is too damn high. There it is. Why Canada's inflation is too damn high. Now let's go back to this article here. There's your inflation rate right there. And there is your bank rate. Bank of Canada trying to catch up with runaway inflation. I called it runaway inflation on this show like 40 times in the last, I don't know how many years. Let's take a look. So there it is right there. So now, hold on. Let's go over here. Look at this. I was going through some old videos here. Chinese takeover of Canada and Australia, New Zealand, and lastly, the USA by 2024, 5 years ago. Okay, what were we talking about? Well, we talk about rate hike. There it is right there. So let's talk about rate hikes. So you type in rate hike on our channel. What we've been talking about, rate hike takes nation by surprise. Canadians wake up to a rude awakening to understanding inflation. That's almost 5 years ago. So Canadians looking for answers from the Bank of Canada after rate hike takes nation by surprise, Ottawa. So there it is right there. And I wanted to throw this out there. Why? Watch this. Trends in the housing market. Rate hike to finally bring inflation under control 4 years ago. So what do you mean? There was a rate hike before? There was back in 2016, well, into 2017, sorry, 2018. They were raising rates to curb inflation because they saw down the road that this is going to be a major issue. And what did they do? Let's take a look. So people were freaking out that their $1 million homes are going to cost them an extra $10,000 a year in carrying costs. So what did they do? Well, let's see if I could find it here. Look, trends in the housing market, rate hikes all over to combat inflation 3 years ago. So this was something they were already working on. They were working on this. And look at this one from 5 years ago. Property tax hike coming across Canada. More taxes to fund more government BS spending 5 years ago. Get out of Vancouver now. Price hikes for 2017. Property tax to impoverish Canadian middle class. So I've been on this like you have no idea. So let's go over here. Look, the great Canadian peso is here. Anyways, let's go back up here. And what do we type in? Inflation. No, what have we been warning people about inflation all these years? Wages not keeping up with inflation. Housing out of reach. A working poor society in the West. Inflation creeping in. Gas prices as high as $1.65 per liter. Food set to skyrocket. So they were already curbing and raising rates. What did they do? Boom, a year after from there to there, emergency rate cut. Say hello to inflation, say goodbye to savings. There it is. They started to cut wages. Hot war ahead. China GDP retracting, print more money, but inflation will creep up fast 4 years ago. Double-digit inflation ahead. Who do we blame? So it goes on. And then what do we talk about here? Rip-offs. So people watching this in the United States are probably wondering, so what? They're raising the interest rates. So what's the big deal? And I get a lot of those emails. Well, here's the big deal. People paid millions of dollars for these homes. Like millions of dollars for garage homes and bizarre stuff. And look, I think that one went for $5.5 million for that. I'm not making this up, guys. We people have overbid and over-leveraged themselves in condo ripoffs, and you can't fathom what it costs. So you type in ripoff, you could find that. And then let's go into here, money laundering. What's put us here? Quite simply, Canada, New Zealand, the UK, the blue states of America have been competing for money launderers to park their money. In some parts of America, and so even some small parts of Canada, you could still find places where wages are in line with housing prices, right? Where wages are in line, people could afford. So why did they keep dropping interest rates to this Frankenstein monster they created? Well, they created this to have locals compete with foreign investors so locals could get in the market, because locals just couldn't get in the market anymore when a housing is 23 to 30 times their annual income. It just doesn't make any sense. So they had to keep attacking rates. And that's why we've had interest rates for so long. So what's going on? Let's take a look. So housing crisis, no investigation in money laundering. So they stopped the money laundering. Money laundering by foreigners destroying housing affordability 3 years ago. Underground banks laundering money. How-to guide to how to destroy your country's middle class 4 years ago. What else do we got here? Mike in the Night, money laundering. Middle class to be wiped out by 2018. Money laundering destroying young families 4 years ago. Money laundering destroying home affordability in Canada. Worst in 30 years. Toronto's the worst 4 years ago. We are being destroyed. Money laundering. So it goes on. Toronto needs more money laundering to keep their housing. Chinese gangs laundering money and shadow flipping destroy Canadians' futures. Toronto needs more money laundering. So, my opinion, wow, things are taking a turn fast in Toronto. Toronto needs more Chinese money to keep it going. And that's why they had to keep lowering rates to adjust to the amount of money being parked on our shores. Toronto needs more money laundering. Vancouver model. What's the Vancouver model? You can look it up. It's the model that allows foreign investors with no questions, no discussion on where you got your money from. And the Vancouver model is a model for the world to teach them how to launder their money. And this has a lot to do with what we're talking about. All right, so then you go back to older articles. Canada will be in a recession without money laundering, 2019. And this week's top stories: Chinese government seizes billions in Canadian real estate. At top Chinese CEO thinks Vancouver is overpriced. Again, Chinese government is bringing back its wealth. Canadian real estate developers are ramping up mainland Chinese markets. So there it is, 2018. They were basically building condos and homes for foreign investors because locals can't afford to get into their own markets. And if they do, they're over-leveraged. And remember this? Remember this in January 2020? World economy would collapse if the City of London stopped laundering money, says HSBC whistleblower. And people living in the States, like right now, in these kind of homes, are probably wondering, what is this guy talking about? If they raise interest rates even 2% or even 3 percentage points, I don't think I would be in trouble, though. I don't think it would be, because where I bought my house, the wages are in line with the price of housing. And bad news for Canadians, there's hundreds of pages of housing in the southern United States for that price. And that's what has happened. And here it is. Want more proof? Canada, get ready for more Chinese. More parked money. Rest in peace, middle class, 3 years ago. So, no, that's so much hate against Chinese policies. Canada wants more Chinese, 500,000 per year to help our ailing housing market. And it just goes on and on. Interest rates had to be basically brought to zero. Why? To basically help our economically, our GDP, or the country's economy that is based off of housing, keep going. The fire industry, real estate, insurance, and all that stuff needs to keep going. Instead of producing, fabricating, exporting, and creating stuff that people need and making it locally, it becomes a major issue. So they just ship it off to the cheapest because we want to be green here. Yeah, right. Anyways, guys, interest rate hike. This is just the beginning. And when we saw on that graph there, what they need to raise interest rates to be in line with inflation, let's take a look at that graph one more time so I can make myself very clear to you guys. They lowered rates to get the locals into the markets, and then look what happened now. People are severely over-leveraged, and then now they're going to pay. Graph, what we talking about? Let's go back here. There's our inflation rate, and there's the bank rate right there. So we need a lot to go before we could... I did a rate hike revelation a few months back, and I said that rates need to be around 9% for it to curb inflation. So there it is right there, guys. Let me know what you guys think in the comments below. Look forward to reading your comments. Canadians are in a world of hurt. This is, again, the 4th time we made this video because they've raised rates to correct it, and then they slashed rates to continue it. So what's going on? Are they going to slash rates? Are they going to do interest-only mortgages to curb the rate hikes? That's a question we need to ask for the future. Mike Martins here. I have spoken.